We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today for part 2 of our discussion is Mel Mattison.
So Mel, when we get to a crisis moment like this, one of the mechanisms that I think I really want to talk about with you is this idea of the securities entitlement holder and what that ends up what risk that ends up presenting to investors that have or feel that they have, stock in companies. Obviously, this is kind of an idea that was brought to the fore as part of the Great Taking by David Rogers Webb. So explain to us how that mechanism can work in a time, as you say, where we have these large drawdowns.
Yeah. So I think this is something where, like, what I've just been talking about a little bit is their kind of plan A. Like that's how they can get through this without a total, complete, like, apocalyptic collapse. It would be horrible. There'd be volatility. We'd have massive drawdowns in the stock market, but we had 50% drawdowns in COVID. We had 50% in the Great. So like they've handled those types of storms before and gotten through it. I think this would be worse than those, but I think in their mind they can kind of get through it somehow. We will see. I think they have a plan B that's also in place for the worst case scenario, which is that they're not able to kind of get through it and everything that just starts literally crashing, where we're talking about, massive bankruptcies of the large financial institutions. And this would most likely be tied to the massive derivative books. So we're kind of going back in the time machine to the great financial crisis. A lot of people remember that it wasn't so much that mortgages were not being paid. It was that there had been trillions, and by some estimates, quadrillions of dollars of derivatives built upon the mortgage market. The synthetic CDOs or the CDO squared, or all of this stuff was out there in the financial ether, and it was threatening to collapse. And that was the amounts of money were so staggering that all of these banks were just going to go under. And so what David Rogers Webb points out in his book and his YouTube documentary, The Great Taking, is that a few decades ago, there were significant changes to what's called the Uniform Commercial Code, or UCC. And basically, people will do it. I believe it's Article 8 of the UCC. They can Google it and read it themselves. But what they did was they changed the legal ownership of securities held in brokerage accounts from essentially the individual or the brokerage firm to the to the clearing organization, which in the United States is the Depository Trust and Clearing Company, and particularly the DTCC has a subsidiary called Seed & Co, CEDE and Co, which people can also search, which I believe last reported held around $90 trillion worth of assets. So this is a small partnership that is the true legal owner of the securities in your and my brokerage accounts. If we own Apple stock or JP Morgan stock or a bond, and we think that the title of that security is in our name, it's not. It's in Seed & Co, and they are the legal owners of it. And what we have is the securities entitlement. So there's kind of two layers. There's our layer, then there's what's called street name, where like it's kind of held like in a Morgan Stanley account or a JP Morgan account. And then the level up from there, it's held by the DTCC. And the reason they do this is that this allows, ostensibly the reason is it cuts down on paperwork and makes things easier to do. But what it actually does is by having that legal ownership there, it allows all of our assets to be pledged as collateral for these massive multi-quadrillion dollar derivatives markets. And the scary part about it is that when you read the UCC, you read that in the case of like a apocalyptic collapse, where we have these firms that are designated as financial intermediaries, go down, where we could have like a clearing corporation go down because they're supposed to match up these derivative books, but if a bank collapses on one end and they're on the hook to pay out to the bank that was on the winning end of the bet, but the bank that lost the bet is under, and the DTCC can't pay that out, that under certain circumstances, these creditors of the DTCC will have first claim on the securities that are being held in our brokerage accounts. And so it's essentially great taking, is meaning that in this type of a scenario, it's completely feasible and within the current legal framework for people to come after what we consider to be our assets. And not only is it, stocks and bonds, but when you read the DTCC website, they talk about wanting to expand tokenization of real world assets. They want to bring everything kind of into this system. Essentially, everything from homes to cars to car loans to basically all assets on this system, that if there's a collapse, they can essentially claim it all and take it away. So it's a little bit of the Klaus Schwab, you'll own nothing and be happy type of a situation, where there would be like a legal framework for the American people. And there's similar things set up in Canada. There's similar things set up in Europe, where essentially all the assets of the people could be stripped away through this framework, given to these creditors. And then, they could come out and say, okay, well, we still need people to live in houses, but you just don't own your house anymore. We're going to rent it back to you, or who knows what's going to happen. So it's a very kind of scary scenario, and it's actually in the law. And if people, wanted to learn more, they could watch that Great Taking documentary. But it's well researched, and it's actually there. It sounds incredible that this is the situation, but this is the way they have legally set up our securities markets.
In some ways, is this, a mechanism by which the banks end up basically having a bail-in of our assets?
Yes, that would be definitely one way to put it. I think this is something that would be very attractive to hardcore neo-Marxian type people, as far as a way to implement essentially a Marxian takeover of the Western world, where they use this financial collapse. They blame it on capitalism, even though what we have is not capital. Like, it's a crony bastardized form of capitalism that we're operating in, but they blame it on capitalism. And then they say, look, this is the legal framework. We have the right. We're going to go in and these assets are going to be seized. But now we have this opportunity to remake society, to make society in a way that's not based upon these outdated, corrupt capitalistic practices, but instead is based on a new world order of, a global system with a global central bank digital currency, where we have a centralized and planned economy, and to each according to their needs, and we're going to take care of you, and you're going to take your pharmaceutical pills, and you're going to live in the metaverse, and you're going to get your universal basic income, and we're going to put in this authoritarian network. And I think, I'm very hopeful that we're going to be able to avoid that scenario, but I think it's within the realms of possibility. It's not a non-zero probability that we see some sort of a financial collapse, and then the use of this great taking framework to attempt to put in some sort of an authoritarian neo-Marxian new world order, which, pretty scary stuff, but I think, it's actually realistic to think about it.
Well, I don't think it's helpful to, bury our heads in the sand and not understand that this is a possibility. The framework is there, as you say. We need to be able to understand these risks, analyze them, hopefully realistically and dispassionately, to be able to really paint the picture for where this system has the possibility of going. You mentioned the idea of introducing a CBDC at that point. Is there framework in place and, work going on behind the scenes that helps with the implementation of a CBDC when that time comes?
Mm-hmm. Yeah. So, as I mentioned,
or when, I guess.
Yeah, I think the BIS is really kind of at the forefront of this. They put out a white paper a year or two ago called "A Future Blueprint of the Future Monetary System," and it basically details all of the jargon of interoperability and programmability, and how they can actually create the rails for cross-border payments using CBDCs. What they talk about is wholesale money, which is basically between the banks and between banks and central banks. But then they also have a framework for retail CBDCs, where it's actual individuals as end users. I think one thing on CBDCs that I follow, and I haven't heard a ton of people talk about it either, is I think one of the big threats that the monetary cabal, if you will, sees is they're seeing these alternative payment systems that are outside of the banking system begin to exist from a technological perspective. And so you look at stable coins, and stable coins, you basically could have a company like a Tether or a Circle, and you put your money in and they buy treasury bills, and then you can spend that money, you get interest on it, but that money is not in the commercial fractional reserve banking system where JP Morgan gets to lever it up 40 to 1. And so that represents a massive threat. And so I think one of the reasons they wanted to put CBDCs in is because they see the technological advantages of things like stable coins, and then they see the fact that stable coins do an end run around the commercial fractional reserve system. And so they want to have an alternative that keeps in place the fractional reserve system, but at the same time could offer some of these technological advantages of real-time settlement, instant cross-border payments, all this stuff. What they're doing now, what I've noticed, is they're trying to find ways to co-opt stable coins to make them kind of backdoor central bank digital currencies. So Senators Loomis and Gillibrand a month or two ago released the Loomis-Gillibrand Stablecoin Payments Act. And I read the act, I read the bill, and basically it says in there that every single one of these stablecoin companies is going to be required by law to custody all of their T-bills at Federal Reserve depository institutions. And so taking all of the stablecoin money that's currently outside of this banking cabal and forcing it, by law into the banking cabal. And so in that way, it goes onto their networks. They now have access to that transaction data. They now have control over it. And so the American people believe, oh, this is issued by a private issuer, by Tether or Circle. But in reality, it's going to become part and parcel of the Federal Reserve System. And I think when you read it, they make a carve-out exemption for like less than $10 billion. But then when you read the fine print, it says, but if it's less than 10 billion, even though it could be like a state chartered company that custodies it, that state chartered company will have to have a sub-custodian who actually holds it, and that needs to be a Federal Reserve depository institution. So what they're doing, and there's a reason why it's Senators Loomis and Gillibrand. This is a Republican senator from Wyoming, a Democratic senator from New York. Those are big banking hubs. So New York, obviously representing the big banks, but Wyoming has a lot of like state chartered trust companies, state chartered banks that actually are very. Wyoming is surprisingly heavy into financial services. People think of it as oil, gas, and ranching, but it has a substantial financial services element to it. And so what this was a collaboration between the left and the right, between Wyoming and New York, to basically say we want to protect our state chartered banks and institutions in Wyoming, we want to protect our big banks in New York, and we want to co-opt the stablecoin market, and we want to move all of that money into the banking system as it currently exists. And that's what that bill attempts to do. And you're seeing things with Bitcoin and Ether ETFs. You're seeing this co-opting of these systems that had the potential to become alternatives to the dollar system, and you're seeing them co-opt it and bring it into the dollar system.
Well, I mean, from Russia's reserves perspective, I don't think that trusting anybody else with your reserves in a situation where the powerful entity ends up feeling threatened by you that doesn't end up working out well for them.
Yeah, definitely. I mean, I think the Russia move was definitely like a shot across the bow to people. Interestingly, Russia was suspended from the Bank for International Settlements after they invaded Ukraine, so they were kind of kicked out of this system. And kind of talk about it a little bit in quads, like Russia kind of has a key role they play. And part of it is that they feel unchained. Like they feel like we've gotten out of this dollar system. And guess what? It's not so bad, right? Like we're creating alternative trading systems with countries like India, with China. Like we're pioneering this alternative to the Bretton Woods USD based system, and they're doing great. I mean, the stock market, the ruble. I mean, the Russian economy arguably is doing, for example, a lot better than China. In some ways, better than a lot of European countries. And so I think it was not quite the deterrent that they hoped it would be, and that they're seeing a little bit of a backfiring on themselves with this move against Russia. And they're hastening other countries to say, hey, we can't hold treasury, because treasuries are electronically controlled, and so they're able to see, even though, like, you can't, and that's really the beauty of gold, right? I mean, it's a major advantage that gold has to things like digital assets as well, is there literally is no counterparty, right? I mean, like, there's no trace, there's no triple ledger accounting on the blockchain like there is with Bitcoin. And I'm not an anti-Bitcoiner, but what I do believe is, like, there's certain aspects of gold that just Bitcoin doesn't have. Bitcoin doesn't have a 2,000-year history. Bitcoin doesn't have the ability to basically be remade, right? I mean, you could take a gold bar, you can mark it all you want. All you got to do is heat it up and melt it down, and you've got completely untraceable element. That is bulletproof in a sense. And so that's why you might see eventually some central banks put small amounts of Bitcoin on their balance sheets as reserve assets. But I think the big reserve asset that they're reintroducing is gold. And, I think that's a huge shift where, post 1971, central banks were net sellers of gold, and now they're net buyers. And this shift of the gold price being set by the East and by central banks and things, I think it's a major shift that's just getting started, and it's why I think gold has the potential to get well beyond what I think most people would expect is a reasonable price. I don't want to throw out crazy numbers, but like 10, 15,000, an ounce within the next decade, to me does not seem unreasonable. And it's definitely not anything that we haven't seen before. We saw gold go from $35 an ounce in 1971 to over 800 an ounce in the 1980s. So, we've seen gold make these spectacular 15, 20x moves before. And I think that we could be heading for a position for something like that to happen again.
Mm-hmm. Of course, we need to acknowledge the idea that the measuring stick, or the idea of how gold is being valued, is also 50% how much the dollar ends up going down or losing value. So that's, one of the things that I wanted to kind of move into is what you see the solutions are to these problems that we just discussed.
Mm-hmm. Yeah. Well, before I get to the solution, there's one thing too about the gold price really quick, is I think there's two things that are going on with gold, right? On the one hand, gold, in theory, right, its value doesn't really go up. Over the long run, it provides a 0% real rate of return almost. And but what does happen is the price can get dislocated for long periods of time. And so I believe we're coming out of a very long period of time where the gold price was artificially suppressed. Mm-hmm. And so we're seeing two elements, I think, affect the gold price. One is the debasement of the dollar. So when it's measured against the dollar, as the dollar goes down, the gold's going up. But the other thing is that we had just an inordinate amount of selling, like the UK sold almost all of their gold, after this. So you had these major holders of gold for decades, like going into the market and selling massive amounts of gold. And that was an artificial suppression of the gold price. So I think what the gold price has coming is not just an increase from a debasement in the dollar, but it has like it's correcting to the upside to reflect, a price suppression that has gone on for a long time. So I think if you factor in both of those, you can actually get a rise in gold that is more than just what the dollar gets debased. And the other thing that gold has going for it is, like I said, it's this reintroduction as a monetary metal where it's getting that respect again, and it's getting central bank buyers, which are creating artificial buying in a sense that can dislocate the price to the upside. So I think the price got dislocated to the upside in the 1980s, and it took a while for that bubble. There was essentially a gold bubble in the 80s to correct. We could eventually head for a gold bubble. I don't think we're anywhere there, but if we start getting $25,000 an ounce in gold, maybe then we're starting to get into bubble territory, but we're still a long ways away from that. So now to get to the solutions, I think that there are alternative, systems, to the dollar, to the entire, international central banking, large commercial banking system that exist. I think some of those are kind of technological in nature. A lot of that's a little bit above my pay grade, but I understand from some people that there are certain, for example, limitations with Bitcoin and what they call the base layer and the amount of like transactions it can handle and different things. But there are people that are working on ways to find like encrypted workarounds where you could have like a Bitcoin, peer-to-peer kind of payment system that would be completely outside of, the dollar system. And so maybe Bitcoin is an answer. Maybe it's not Bitcoin, but maybe it's something else. Maybe it's the create.
Sorry to interrupt, Mel, but I find it also interesting, trying to be completely fair to Bitcoin, that those privacy tools are the piece of the Bitcoin infrastructure that is the most under attack from regulatory agencies. These blending pools and ideas that give you some type of anonymity are the pieces of that infrastructure that are the most under attack at this time.
No, definitely. I mean, they're scared of it. Like we talked about with the stable coins and Bitcoin, they're scared of these systems that are outside of the banking system and that also often offer privacy and anonymity. I think that is part of it. The privacy, the tracking is part of it. But I think the other part that sometimes people don't talk about as much is the fact that it's not on J.P. Morgan's balance sheet and they can't lever it up 40-1, and that's the other issue they have with it. So they'll use it as a boogeyman that this is going to be used to finance all this terrorism and everything, and that's why we have to regulate it and take control of it. But I think kind of deep down in places they don't like to talk about at parties, to take a line from Few Good Men, what they're really worried about is they're worried about it being an alternative to the bank. Like the whole banking system, right? It's all set up to keep that money in the banking system so that everything has to go through the banks. They started doing this in the 1960s. In 1969, the Federal Reserve discontinued the issuance of 500,000, 5,000, 10,000 paper notes, right? I mean, when you think about how much a home cost in 1969, you could buy a nice home for $20,000, $30,000. That's 3 pieces of paper, 3 $10,000 bills. And, you could have that folded up in your sock and go buy a house with cash. They knew they had to get rid of it. Like there's a reason why we don't, like, when you think about it, we had $10,000 bills back then. Look at all the inflation. They're never coming out with a $200 bill or a $500 bill or a $1,000 bill. We have arguably more need for $1,000 bills now than we had in the 1930s. Yet we had those in the 1930s because people used cash for major transactions. People bought homes in cash. Corporations could do M&A deals in cash. You could do those types of things with cash outside of the banking system prior to 1969. Now with $100 bills, good luck trying to do $1 billion deal. Like it's impossible. But $1 billion deal adjusted for inflation back then might be like 100 million. Well, with $10,000 bills, I mean, you could fit 100 billion into a small briefcase. It would not be hard to literally do $1 billion deal, inflation adjusted, with bills. And so they have brought everything into the banking system. And then you look at credit cards, like people are buying a 25-cent pack of gum and they're putting, like, every single thing is now, going through that banking system. And there's all these ways they get it. Like, we still have T+1 settlement in, like, the stock market. Like, it used to be T3 when I started in the business, meaning it took 3 days. If you bought Apple, it took 3 days for you to actually settle. Then they changed it to T+2. And then just a couple months ago, they did T+1. Well, guess what? They're never going to go to T0 because they need that. They need these assets floating around in the ether, because when they float in the ether, they control it. You look at a company like an ADP, that's the largest payroll provider. One of their biggest sources of income is investing the money in, like, the 3 days between the company paying your paycheck and when it gets settled in your account through, like, ACHs and different things. So, they call it, investing the float. And so there's this whole financial system that's just built up on having control of our dollars when we're not kind of actively using our dollars, so that anytime we're not actually spending them, they're investing them, they're using them as collateral, they're loaning them out. They're constantly in need of our dollars, and anything that escapes that. So I do think that finding a solution that does that end run, even if it's technologically possible, they're going to pull out all the big guns to try to stop it with their regulatory armies and everything else. And so you really do get into this situation where I think the only conceivable way out of it is for kind of the global and the U.S. consciousness to kind of rise to a level of really understanding this, maybe not on all the details that we've gone into today, but understanding it on an intuitive level, which I think they're getting to, and essentially demanding that, changes, serious fundamental changes be made, whether that means a dismantling of the Federal Reserve or a complete reorganization of some of the Treasury Department practices. And, I think that's a lot to hope for, and that's optimistic. But I don't think that it's completely impossible if we have a financial crisis that people begin to see we could be going down this really bad dystopian path, or we could start off, fresh with something better. And, there's going to be evil forces that want to keep their power on one side, and then there's going to be people that understand what's going on the other. And I think it's going to be a battle, and I don't know how exactly it's going to turn out. But I think the best solution is, like, education, keeping abreast of this, and, like, telling friends that don't know about it when you're having a beer on a Friday night, getting people to understand what's really happening. And then, perhaps there's a chance that if it gets to that, higher level consciousness in the broader society, that when we face the dilemma that's coming, we demand that we face it in a way that resolves itself, at least somewhat to our benefit.
It's just it seems like such a daunting problem. But I think, I completely agree of having assets outside the system that have, the minimal amount of counterparty risk associated with them, I think, is the best possible way to move forward in this. So let's make that a little bit more explicit if we can, Mel. Is real estate or, physical gold, silver, those type of tangible items to you the most attractive way to be able to, carry value from this current system that is clearly broken and on its way to a fiery landing into whatever new system ends up evolving out of that?
Yes, I think in the medium and long term, especially, those assets you mentioned, I think, in the shorter term, we still are seeing this, I think, bubble phase growing in certain financial assets in the stock market. I think that still probably has room to go until the 26, 27, 28 type time frame that I've mentioned. So I wouldn't be surprised to see the S&P at 7,000 in, a year or two. I wouldn't be surprised to see, the NASDAQ continue to go up, even though it's been, pulling back now. We're seeing a rotation a little bit into things like, small caps or maybe industrials. But I think like the longer term trajectory, not trying to predict what the market's going to do next month, but looking 12 months, 24 months out, I think, markets are going to go up. But in the long run, like I said, when this volatility crisis hits, those markets will be hit. And I think what people will go to as, where they want to be are going to be, those tangible assets, things like gold, silver. I think the housing market, in the long run will be fine, but there could be volatility in housing at that point as well. If kind of the mortgage system starts breaking down, or people start losing their jobs and they can't pay rents. And so if you're really looking for something that's perhaps a bit more bulletproof in the real estate area, I would suggest taking a look at things like farmland, or even just, open land in areas that's surrounding by national forests or whatever, where you're not having a high cost of carry, and where you're not necessarily dependent upon renters paying the mortgage in order for you to have it. So if you have where I live in North Carolina, there's still places you can go out and find land for $5,000-$10,000 an acre. It's not in cities. It might not be arable land, but there's land out there. So land, gold, silver, platinum to a lesser degree, I think are all good things. I think that if Bitcoin fulfills its promise, it has potential, but I think it's still a little bit unproven, and I think it's still going through a price kind of discovery phase. It trades a little bit more like an Nvidia or a risk asset than, it hasn't yet moved towards a correlation that's tight with gold, which tells me that it's still not being fully priced as a store of value in the way that gold is a store of value. And so I think in the long run, it could have a higher percentage move up, but it's going to be very volatile. Whereas I think gold is your proven, store of value asset. So I think those are really the best. I think if you have some money, I think T-bills they will be paid. And I think if we see some of this volatility and you're astute or quick enough to move in and perhaps buy some of these assets that get devalued, that eventually will go back up, but whether that's housing or the stock market, there is an old saying, somebody said, like, keep 25% of your money in real estate, 25% in like cash or T-bills, 25% in gold, and 25% in equities. Mm-hmm. And I think, cash, gold, and land will definitely do well. And I think equities will do well for at least the next two, maybe 3 years. But at a certain point, they're going to have problems. So I think people that are just holding everything, like, oh, I just have it all in the S&P 500 and QQQs, like that's a big mistake. And people that think, oh, I've got a 5% or a 10% allocation to gold, I'm good. I think they should really reconsider, lifting that allocation and understand that gold has provided a good return. Like gold is not like some horrible asset that hasn't moved. I mean, you go back to 2000, I think it's pretty much neck and neck with the S&P ex dividends. Granted, dividends are important, but it's not like it doesn't do anything. And because of all of those factors I talked about, like its reestablishment as a monetary asset, global central banks buying it, the fact that the price suppression from central banks being sellers is now over, like I think we're kind of in a golden age for gold. And so I think, increasing that allocation to gold and to silver makes a lot of sense. So, that's what I've done a little bit with my portfolio. It's definitely mostly precious metals and real estate, but I do have, some stocks and cash as well.
Mm-hmm. Well, part of I don't know if it's, I think probably the best way would be to phrase it would be optimism at this time. In the last month, we've seen the presidential debate, we've seen Trump, the assassination attempt on Trump. There's all these big factors that seem to be really, throwing this into Trump's favor. And there's a lot of people that really see Trump as almost this messianic figure at this time. Do you think that he has the ability to solve a lot of these problems?
Yeah. So, I mean, full disclosure, I'm a Trump supporter. I bought my first MAGA hat in 2015, so it's been a while. And I've seen him as as a hope, not as a savior at all. He is a man. He has his issues, and I think that there's a lot of these forces have been growing and been put in place, going back at least 80 years to Bretton Woods, if not longer, and that it's a massive super tanker in the ocean, and there's not a way to completely turn this thing around, even in a 4-year time period. So I think regardless, like if people have some belief that Trump's going to get into the office and be able to wave a magic wand and everything we just talked about is going to go away, that's definitely not where I'm at. I'm at where these are massive problems and there's massive forces arrayed against them, forces that dwarf in some sense even the presidency of the United States. And so I think, especially if he didn't have like a fully backed Congress, and I think basically there's still a very large percentage of the Republican Party that's essentially the Mitt Romney wing that doesn't really like Trump. Again, places they don't want to talk about at parties, they don't want him there. And so, he doesn't have a lot of help to like fix all of this, right? And so it's a little unfair, I think, to think, well, Trump's going to get in and everything's going to be. That's not to say like he can't make changes and do some things that could help. And so that's my hope, is that's what's going to happen. I think there's been some things with the addition of JD Vance, who I think says a lot of the right things, but then when I look at his history, raise some eyebrows of some of his connections and different things that give me a little bit of cause for concern. And so I think the political situation is very interesting. There's definitely like a lot of pieces on the chessboard being moved right now. But I think in many instances, like, this is really going to be up to the people. It's going to be up to us understanding what's going on. And it's going to be like a long fight that's going to go on. And that, sure, it would be great if Trump came in and maybe did a massive audit of the Fed, maybe established a congressional commission to reexamine, monetary policy in the United States and come out with recommendations of either, a new mission for the Fed, if not an outright, abolishment of it. Things that we've seen in the past. Andrew Jackson obviously got rid of the second central bank of the United States. So there's a whole bunch of things that I think could start to happen in the right direction if we get Trump in. But I'm not hanging my whole hat on it to say, well, if we can just get Trump in the White House, then we're going to have smooth sailing to get all of this stuff fixed. And I think a lot of people are not naive, and I think they understand that. But I think it just is worth mentioning. And I do think that you're seeing a lot of the power players making moves to try to do end runs around any of this stuff that would try to get put into place. And so it's going to, if giving Trump benefit of the doubt that he's got his heart in the right place and he's going to want to make the right moves, he's still going to have a tough time trying to navigate the forces that are going to be allied against him and how sneaky and subversive and powerful they can be to try to keep all of these charades going. So it's like the battle continues. I think this battle really has been going on, ever since our founding. I think when you look at some of the things that Alexander Hamilton did when he was Treasury Secretary, and what he did with first creating, the Bank of North America, which was our central bank, but basically under the Articles of Confederation, and then the first Bank of the United States, which was our first official central bank, and then the second Bank of the United States. I think that there were debt schemes back then. A lot of Hamilton's cronies bought up all of the U.S. debt during the Revolution for like 20 cents on the dollar, and then Hamilton gets into the Treasury and he makes sure that he restructures it and pays off all that debt, and they get made whole, all of his New York City cronies. So there's been a bunch of kind of debt schemes and shenanigans, and fiat money printing. The continental currency was devalued to one continental to a penny at the end of the Revolutionary War. It lost 99% of its value just during the Revolution. So I mean, we've had a lot of these types of episodes in the past, and we've made it through. And I think hopefully this is going to be another big test that we can make it through this one. But it's definitely shaping up for an epic battle, I think. And I think things are starting to come to a head, and we're only at the beginning of it, but it's going to be going on for the next few years at least, if not longer.
Mm-hmm. Mel, I saw that you kind of made a post relating a lot of the religious symbolism around what's happening right now as well. Do you think that is, an overt or deliberate action to kind of frame Trump in this light in some ways?
Mm-hmm.
Because he is such a polarizing figure, right?
Yeah, I mean, I think there is. I think there's a lot of. I mean, me personally, when I watch, like, let's say I watch, see what's going on at the Republican convention on Fox News, like I see that as a very much a propaganda wing media station, right? That at the end of the day might talk a game on one end, but they're really protecting corporate interests. In the same way that NBC is doing that. And so, I feel like the corporate interests, like there's kind of two levels. There's this level where there's this kind of side of the ledger that is part of this whole system that is like ostensibly out there for Trump. But are they really? Are they really for draining the swamp, or are they for draining the swamp in the way that they want the swamp drained? That winds up kind of not necessarily benefiting the average American, but winds up benefiting their corporate interests. So if you look at somebody like a Peter Thiel, who's a big supporter, he's a libertarian type guy. But part of his libertarian belief system is that you should have the private sector doing a lot more things than what they are, including the entire surveillance state, right? So he's one of the main backers of Palantir. Palantir is a very shadowy company. The word Palantir, it's from like a J.R. Tolkien thing. It's like it comes from like a word which meant like these secret stones that could see anywhere in the world at any point in time. And they also had the power to make like other people's secret stones see the wrong thing, And so like this Palantir is a lot of the, it's the data mining, the algorithms, the AI for the surveillance state, for the CIA, so like a big contractor for Palantir is the CIA. This is a company, of Peter Thiel. So I think you have to look at it, what's happening in the shadows, where you might have these people that are coming out and they're like, oh, we're for everything that the America First agenda stands for, but you have to question yourself, are they really? And I think, so part of it, to get back to your original question, I guess, was when I'm watching some of this corporate media and, playing on people's maybe Christian sympathies, right? Like, looking at framing Trump as a savior, making the divine intervention. And I'm not saying it wasn't divine intervention, but there's just something that somewhere inside me rubs me the wrong way when people kind of tug on those heartstrings in a kind of a political context. It's kind of like patriotism, the last refuge of a coward, or whatever that saying is, like when you're really pulling on like patriotism or on people's deep-seated Christian beliefs, and you're painting the propaganda picture in that way. Like, I don't know what side God is on. I mean, Tucker Carlson said that in one of his speeches. I don't know what side God is on. Maybe he's on Trump's side, maybe he's not. I can't speak for God. And when I see people that are more or less speaking for God, it does kind of raise that spidey sense to say, I don't know. Like I said, it just kind of rubs me the wrong way. Like this is a political speech. This is someone running for the office of the president of the United States. That's an extremely important office. Let's look at the policies. Let's look at what's going on. I'd rather you not try to sway my vote by saying that that Jesus has ordained that Trump must be the next president, because we don't know what Jesus has ordained.
Of course, I mean, you mentioned Palantir, and what an apt kind of description or symbolism for our time right now as well. You also mentioned Peter Thiel, who, as I understand, is a big backer of JD Vance. So, what are some of the oddities or the intricacies of understanding Trump's VP pick at this time as well?
Yeah, I tend to believe, and this is complete conjecture and just my opinion, but I tend to think that Trump felt underfunded in a sense in 2020. I think he saw the impact that tech titans like Zuckerberg had on the election, that big money from people like Soros had on the election. And I think he recognized that he needed, if he's going to go out there and kind of slay the dragon, he needs some of that big money too. Mm-hmm. And I think one way to cement getting some of that big money was the JD Vance pick. So it's a little bit of maybe a dancing with the devil, but something that maybe he feels he needs to do. I think that, it wasn't a coincidence that you saw the Vance pick come out, and then immediately after you saw the coalition led by Elon Musk promising $45 million a month to help with Trump's campaign. And so I think with Vance, what concerns me a little bit is how much he's been chameleon-like in his very short career. And so, number one, people talk about his business career. I don't know that he had a business career. Like, I've looked at what he did. Like, he basically met Peter Thiel at Yale. I think Peter came and gave a speech, and Peter kind of handpicked him out of Yale Law School, brought him out to Silicon Valley for a very short period of time. Like, he was pretty much immediately working on Hillbilly Elegy while he's supposedly this, busy being a VC. And then as the Hillbilly Elegy was coming out, Peter Thiel essentially financed for him to go back to Ohio and give him a little bit of play money to do some VC work in Ohio. But in reality, what he was doing this whole time was laying the groundwork for his political career. He was talking about his book. He was doing all of that stuff. It's not as if he had this sparkling, decades-long career as an amazing venture capitalist. And you can point to all these great companies that he invested in. And he was just, a first investor in Facebook, which Peter Thiel was the first outside investor in Facebook, by the way. So, you have this almost candidate creation. And there's certain things with JD Vance's story that just, to me, it's like trying to paint this picture of something that in reality, when you dig a little deeper, doesn't actually kind of completely ring true. And so you have to question, what are these allegiances that a guy like Vance has to somebody like a Peter Thiel, given all that Peter Thiel has done for him, and what type of influence will Peter Thiel have? And then you look at literally the billions of dollars in government contracts that firms that Peter Thiel is associated with, especially with organizations like the intelligence complex and the national security complex. These are questions that I think should be asked or should be explored. And so they're very interesting. They're somewhat concerning. But again, I think you could make an argument. I heard someone, I think it was Tom Longo, or I believe, making an argument that, Trump is aware of all of this. He is making deals with these people because he needs to, in order to get the power that he needs to make the changes he wants. But at the end of the day, he's not going to let these people have complete control over him. And that we can go fight the Peter Thiels of the world later. We've got, bigger fish to fry right now. And so, I think that's one way to look at it as well. What the right answer is, mm-hmm. I don't know.
Well, I think that's a very generous and realistic way to look at this, Mel, and I appreciate you kind of bringing that up. I'd like to wrap up here, Mel. I really want to thank you for a very interesting, very wide-ranging conversation here today. Is there anything that you'd like to leave our listeners with to think about or to consider before we do wrap up?
Well, they could consider taking a look at quas. They might find that interesting, of course. As far as more serious topics are concerned, I think, yeah, they'll be very practical. So if you're someone who watches this and maybe, you feel like some of the points we're hitting on are in the right direction, but you've been hesitant to maybe make practical moves to be able to handle it if this sort of a situation comes, I would advise people to start making some of those practical moves. And what do I mean by that? So let's say that you have been, invested in the stock market. Maybe you have an old 401k here and an old, like, start getting your ducks in a row. Start understanding exactly what you own. Start having it consolidate your 401ks into one account. Make sure that if you feel like you need to exit the market, like you're able to go in and right where things are, and you can do that quickly. If you have elderly parents that maybe you help with their finances, and they have a financial advisor who they love and who gives them a birthday card every year, but he has them like 70% invested in mutual bond funds, maybe have a conversation with that elderly parent and say, is having a large holding of, let's say they're already retired and they're in like an 80-20 type portfolio, like 20% equities, 80%, bond funds. Like, is that really the right investment for them? Should they be selling some of those bond funds and buying gold, buying silver, making moves so that, they're protected if some of this stuff that we've talked about actually starts to happen? So I think my thing would just be, these are really fascinating big picture things, but don't focus so much on the big picture that you've neglecting some of the practical things in your own life. And you've just said, well, I'll get to it later, or we're not there yet. Take a look at your own finances, take a look at the finances of your loved ones. And this isn't any particular financial advice. This is just saying, in the context of this, given your own situation, take a look at those and see if there are some moves that need to be made, because now is not a bad time to make those moves. This market's only a few percent off of all-time highs. You've got gold's been consolidating. It hasn't really broken to crazy levels yet. It's been in this 2,400 range, more or less. For you've got an opportunity here to do some things that, who knows how long that opportunity is going to last.
Absolutely, Mel. I couldn't agree with you more, and I really appreciate you giving us more clarity on a lot of these ideas. Of course, for anybody that wants to learn more about Mel, that's all available at Mel Mattison, Mattison.com, as well as at Mel Mattison 1, the number 1 on Twitter. Mel, did you read the audiobook?
Did I read the audiobook?
Yeah. Like, did you record the audiobook?
Quads. No. It was recorded by a professional. So
Okay.
It was a gentleman from Canada, actually, who read it. And I think Kyle Schneider, I think is his name. But it's out now as well. So the audio version, the ebook, paperback, it's available Amazon, Walmart. If you like a local bookstore, you can go to them and ask them to order it. It's distributed by Simon & Schuster, so their supplier will be able to get it for you. So it's available wherever books are sold, whatever format you prefer. Quaz, financial thriller. If you search that or go to my website, you'll find all that information.
Wonderful. Mel, thanks again so much for your time today.
Thank you. Appreciate it.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.